Good afternoon. Welcome to Options Tender. It is Tuesday. Is it Turnaround Tuesday? It appears so. November 12th, 2024. We're doing this video about noon Eastern Standard Time. If you want to get these videos, consider becoming a YouTube member for 99 cents and you get the Discord with it too. So we're going to go through SPY on multiple time frames. We're going to go from the monthly down to the 65, and then we'll go around the horn to IWM, SMH, QQQ, and VIX, just to see what's going on before CPI. Big day tomorrow. CPI and then PPI on Thursday. So those are good catalysts for, really anything to happen. When I say catalyst, it doesn't mean it's going to go my way. It just means the market is probably going to move. So clearly I've been bearish for a few weeks now. And, I stand by it, and I'm going to talk you through some of the things that we're doing and did. All right. So let's go. Let's jump into it. We have SPY 2000 top, 21 top, 24 top. All right. We're forming a top right now. Yes, we have a throw over here on this wedge forming from this top. But remember on SPX, the 2029, the future, right? 1929 top coincides with the 2000 top, doesn't touch. Well, why don't I just show you? I'll repeat it. I put that video out there. I'll post it up top. And then, so we're right at it right now, okay? You see it never touched the 21 top. We have a different channel for that, okay? So maybe it'd be more appropriate. I'm not going to spend too much time on this for SPY because we don't have all the information from way back then. More appropriate for that. That makes more sense. And we're right at the top of that wedge so far. And we'll see when and if we get that reversal. And probability has it, we're right there. We're likely to reverse off of it. Okay. Now, I know that there's a lot of controversy. Market's going to go up because of whatever presidency, this and that. I work by charts, and I think price is going to reject. So I'm not relying on fundamentals on this. Now, you can also argue everything's bullish about this chart. 8 EMA, bullish, okay? The stance, the 20 moving average, that's a simple moving average. We're trending to the upside. So on the monthly time frame, there's nothing wrong here until we go to our oscillators. Okay, and now I believe I'm not going to work it out now. We either have, I know SPX were a little bit higher, so I'm not worried about this. We might have a class B equal top there. Either way, the only thing that does is open up, after a correction, maybe it's a little more shallow than we think, and we only correct from this structure here. Correct 50, 60% and go get a new high. Okay, maybe that's what this is indicating. But I'm not walking back the fact that we're going to have a correction, and a large one, I think, a recession. All the other indicators tell us that. We have a 3-peak divergence in RSI, no arguing that. And in this time frame, we have the slow stoch with a negative divergence there. So it's really, really long-term stuff here on the monthly time frame. That's why it's so important to know that this is going to correct for multiple years, in my opinion, because of this time frame having those divergences. Let's go down to the weekly. On the weekly time frame, we have this top wedge here. You got a little bit above it. I could draw it a different way so the peaks all touch, but it's having trouble a little bit right here on this week. We'll see if we get some sort of reversal candle or not, or maybe even a cloud candle. And then eventually I think we'll test the bottom of this potential channel here. And I have this drawn out on using this line on SPX as an expanding wedge here. So that's why I have that there. On the weekly look here. Now, what I believe is happening on the shorter time frames is this, because we have our 162 on the lower time frames that we're up against right now. I believe a correction is going to happen off of it, a good reaction. Do we get back above it? That will be the bull case, right? I don't think that's the case with all the divergences layered on every time frame, but we'll have to keep that in mind, right? If we get above the 162, just like this scenario, and hold above it, then that's bullish. So I thought we were going down here. Then we had the correction and then the election. And so this is a very similar situation. And, you know, we have the end of December here. The end of December, we have a time and price relationship. I don't know where price is going to be at the time, but that's the only thing that we have right now. And I'm going to have to move this, adjust this to the, whenever we do get a high, this is going to matter a lot more. So I'll put it on this week just for example, but is that going to be the top? I don't know. So those in the future will be our time and price relationships, but we don't have anything in the near time. So this really doesn't matter so much right now, but I'll just layer these here. Sorry, we get a lot of them. Didn't realize that. Okay. I do spend a lot of time with you guys, so consider playing this at 1.25 or 1.5 speed, just so you get this information a lot faster, okay? I want to be thorough on what I look at, so you guys can do the same thing, especially if you're new, or if you're seasoned and you just want a different perspective. So on the daily time frame, we have this bearish rising wedge. We also have, this is the other look, the way that we're looking at it. This is the expanded situation here, and I do think that we'll test the bottom of this over time as well. And will that be just the correction to go higher from, you know, this peak here? That's what we talk about in the SPX video. So again, I'll post that up above. But let's go back to the traditional look. This is a traditional technical analysis, and we have, since we went higher there, we could probably raise the bar there. Don't know if we'll get to that point. Doesn't really matter at this point. This wedge bottom, I just want to clean this up, is no longer needed because we broke down and then formed a larger wedge, which that would be that line there. Okay, so I'm going to take this one out, and we have this larger wedge bottom here, and then a wedge forming inside of it. And so that's where we're kind of fighting with this top here, a little throw over. Let's extend this, and that's just under it. Yeah, we can play around with it up there. I like that peak here. And then if we break down from that, it could be a fake break, but we're looking at this wedge to test down here. And talking with people, traders in the Discord, we're looking at, hey, where's the initial spots? Well, the first obvious would be, we'll do it on the 65 for the shorter term, but on the daily time frame, I think it's very significant, this area here, because we had a lot of trade here. This is zone. So the zone also happens to coincide with the uptrend that we redrew because of the new highs to this low. All right, and that's our secondary, that's our bigger wedge. And so this lower time frame, I think this wedge will break down, but we'll have a little trouble here initially. So in my mind, you know, we're looking for an impulse wave. Is it going to be like a 1-2 off of that lower time frame and then head lower and just start breaking down everything? Or do we have a pretty vicious first wave and then we get a significant second wave? That, I think, seems more likely, but we'll see. Because we're already testing. We already tested these moving averages. Let's see if we burn through them, and then this will be a good zone to see some support at. And that would just be a clean move. 1, 2, and then start heading over for 3, 4, and 5, which might test the lows here, and an initial impulse. All right, I know that's very low. It's around 500, but I think that is a good spot to look for. Okay, let's bring up the daily. Now, here's what we're rejecting off right now. We had our time and price yesterday on the daily time frame. So is this the top? Is the top in? That's what the question is going into CPI. And, you know, I believe so. And I think we can act on that as if it is. And I'll hide this. I'll hide this now that we already had it. We had a cluster there. It's a good time and price relationship right into resistance at the 162% retracement. So where do we get that? We had this wave 3 to 4, and then we retraced, got back above, made new highs, and now we have our main targets at 127.2 and the 162. So that's, we hit the first target, got above, and broke down. That's where I started getting bearish, is right here at the 580. Now, as we got to here, we talked about positive divergence. Okay, so we had to load up, and you can go back and look. Well, if you're a member, you can check out my trade alerts and go back and see all the calls that we put on here. TQQQ, Tesla calls. We had SPY calls down here, and after that, we had the election and takeoff here. But I do believe this is a good top, objective top here, and on the lower time frame, the daily from the weekly, remember this was the weekly top, the 162% retracement. We got above, held above, and now on a lower time frame, we had some business to take care of, and we got there at 599. And we're starting to reject off of it, so we'll see what happens at that point, going into CPI and PPI on Thursday. And we have some more time price relationships on the daily time frame going to 1117. So we'll see, maybe, you know, on the lower time frames, maybe we get some sort of bottom just for a bounce in 1117. It's possible. We have a big cluster going out here at 1120. Let's call it 27 and 29. So that cluster here seems huge. All right. And we also have another one coming after about 12.5, 12.4. And so our swing trades, we want to cover all those areas. So where does price get to at that point? I don't know. But in this cluster, we'll see where price is, and we'll be looking for a bounce in these areas here. Okay. Okay, so we'll probably start adding time and price relationships again at this top here, so we can add on to any of these clusters. But we should see a low somewhere in late November or early to mid. You know, we have to see what price tells us going into these time frames, and I think that would be a low at that point. Now, once that happens, I have marked the bullish scenario. I'm not in this camp, okay? I think we're going to get a lower high and continue lower. But I wanted to put this out there because I know there's a lot of bullish people with whatever their targets are and however that might be. And so maybe we get an extension here. And so at that point, maybe this is an ending diagonal from this retracement. And we have an A, B, C, D, and E, right? So that would be or 1, 2, 3, 4, and 5. And if it's an ending diagonal, then you have an A, B, C, down to a 3-wave move down, 3-wave move up, 3-wave move down, 3-wave move up. And that goes into, I mean, who knows what the extensions are, but that could go well into 650. I don't know. We'd have to work that out. If we get price on top of 599, then we'll work out more targets from this correction. Okay, so that's how we do this. Let's go to 65 and show the much more near-term targets that we have, because we don't have any market structure to the downside at this point. We can't really use Fibonacci extensions and retracements and things like that at this point. So we're starting to creep down at this. It's really like a grinding move here, not very impulsive, but I think we're just waiting for more economic data. So at this point, we had this falling megaphone, And I think a very natural spot where this where we broke out, you see the island breakout here from the election. I think that would be a natural spot, first spot to test. So maybe we get our initial move down here and so on, bounce and break down. Okay, so this would be a more conservative play here at the 580 for a retest down to that point. Do we get there? I don't know. Maybe we gap up and then start heading lower. But I do eventually think that we'll get to this breakout zone. And that will be testing this trend line as well. And this isn't a time. I don't have time on this in particular. It's just a position. And it seems that the 20 or the 200 moving average and that will be coinciding here. So it looks like a lot of confluence will happen eventually somewhere around here. And I think we might get a reaction off of that and then a bounce and then lower prices. So FOMC is 12.18. So maybe the low is going into FOMC and we get a breakout from there. It doesn't matter. FOMC a lot of times plays in the middle of trending moves and its continuations, but they can be peaks as well. So we'll keep paying attention as that comes closer. Okay, so here's another view of that 162% retracement. We got there. I did have the retracements from this move here, and it was just underneath, so it doesn't really matter. Both were there, and so we're rejecting off of this. And we have 1113 cluster here in the 65-minute. So, maybe this is a low going into Wednesday. I don't know. Maybe we gap up into 1113 and we consider that a top at 1113 with this time relationship. So we'll see where price ends up. We're looking kind of bearish right now, but we'll see if this is just a three-wave move correction and we get one more high out of it. Which all that would do is form one more divergence there. And I know we're kind of sick of hearing that word, negative divergence, but I mean, that's looking at this right now, we might be getting into a zone where it'd be good to hedge going into tomorrow, because if we get one more high out of this, then we're going to create a divergence here. We had a very small one so far, but we can create another one, and then maybe on the RSI as well. But we're not oversold, but we're getting to that point already, and the price has hardly moved. And so we want to make sure that we protect our positions, our swings that are way out into, I have some January, I have some December, and so forth. We want to protect that with some calls that are 2, maybe 3 days out, because those calls will be much more volatile, more valuable, move quicker in price than your swings way out. So you don't need as many. You probably only need 25% of your primary swings to protect some of that, and then we'll add them right back on. So. Let's see here. Let's go around the horn. And when we're close to Friday, so TQQQ or, whatever leverage instruments work out well also. Oh, sorry. Am I boring myself? Okay, so we have the Qs, broke new highs, forming the wedge here at a throw over. And we're looking to test the bottom of that wedge just in the lower time frame. That would be a good initial spot to break down from here and to test there, maybe another bounce and then back lower. Okay, so that would be a real conservative 1-2 setup, and that would also be a fake break. And then if we go on the daily time frame, that would be a much more, if the market started falling out of bed, this will be a much more direct move here to about let's call it 480, 478, whatever, but that zone. and that would also be the 200 moving average and the trend line as well. And that trend line, I know we had a spike underneath it. We can move it down to there just in case. We'll have a benefit of the doubt, whatever's closer to that 200 at the time. So yeah, that might be the proper place to put it. So we'll leave it there for now, and that will be right with that 200. And that'd be a perfect place to test wherever it might end up at the time. When the time comes up, it could be straight down, it could be a little bit higher there. We'll see. So that 580 looks good, and that gives plenty of time there. And that's into, look at that, that's into December, if that's the first initial move. But things move really quickly. So it could be a little bit lower going into beginning of December. We'll see. We'll track this, but I do think we're at minimum just due for a pullback. And then you can argue at that point, the structure here could possibly be an A, B, C for your ending diagonal to go higher. Yeah, you could definitely argue that. Again, we form these divergences on the QQQ finally on the weekly time frame from this one. So depending on what our oscillators look like on a pullback, we'll probably be oversold. We'll go long at that point, and then we'll see how overbought we are going into retracements at that time. So that's how we'll be looking at this. Is we'll form some retracements. I'll have to clean this up a little bit, but what we'll do is when we get down to certain levels, maybe here, the 480, maybe it comes down to whatever. It doesn't matter at the time. We'll see where it goes after that. And then we'll line up some retracements from this initial move, and we'll see going into those retracements, whether it's deep or shallow, we'll be looking at our oscillators and our RSI and see if it's already oversold going into those resistances, and that will give us clues on whether that's just a dead cat bounce or we have a price action that's going to go much higher, as this could be a simple wave one. Since we made new highs, this isn't 5 anymore. We have 5 over here, but remember, if we want an extension, then this becomes wave 1, and it looks like a correction, right? That's what's so confusing about it. This cannot be a wave 2 anymore. Get rid of that. So either way, this is still an ABC to me, ABC, and this could be a ABC into 1 and then get a wave 2 and continue higher. So that would be a very bullish scenario. I think it's going to be initial move down, we get a retracement, we head lower. And so let's go to 65 again, see if there's anything on this chart we can work out here. Yeah, I have to take out the targets. We don't have targets or anything yet. We're just looking for initial move, and that could be into that 480 area. I don't really have much to show out this chart, and wave 5 would be over here. And again, it looks like an ending diagonal, 1, 2, 3, 4, 5, or an A, B, C for wave 1, wave 2, and higher. So there's your bull bear case there for all y'all that think the market's going to go up forever. And here I'll do the daily time frame for IWM. We have this ending diagonal here, and we're rejecting off of the top of this. You see that wedge forming? That's a bearish rising wedge. We're rejecting pretty hard off of it at this point. So with this correction here, we'll have to see if it holds and wants to continue higher. But we did not make new all-time highs at this point. And what we're looking for, it doesn't matter if we break the highs and fake break, or we're breaking down from this point. It doesn't really matter at this point. What we're looking for is a wave B to end. And I can expand this out. I know I've showed this before, but wave B to end, and then an impulse wave for wave C, and this is going to take plenty of time. All right, and so what we're looking for is a flat pattern at this point. Okay, and in the initial market, this would be all-time highs. It's not counted the same. It's not a flat pattern. This is our wave 1. All right, and after that, then we're talking other things to happen. What I think ultimately is this one big flat pattern is the start of a bigger A, and then a B, and then a C. And so what we'll get from the market is a 5-wave move, a bounce with IWM, and then a 5-wave move in the rest of the market. And so that will be a zigzag. All right. So this, a larger flat pattern where you get A, B, C, and in the major market, A, B, C, zigzag. Pretty big move today, down 1.75. Didn't realize that. Let's go to SMH. SMH is just, I mean, it's just weak. So it's a bear flag. It's pretty obvious. Can price go higher if there's some sort of, if NVIDIA has earnings on the 20th, I believe. Can that, if it gaps way up, sure, we can get a new high here. We can fill out that flag a little bit more, but overall, this is just weak compared to everything else. SMH is going to lead the tech market down. Tech market made a new high already. We're diverging. We're making lows here. You know, we're going to make a much bigger low here eventually, especially when this flag breaks down. You can draw this to touch all 3 lows if you want to. I have kind of the benefit of the doubt low here, but you can draw it either way. And this, at this point, we can draw, this is a simple 1-2 setup. All right, we had this, we got to adjust this because it was a 1-2-1-2 at some point, but right now we have the initial 1. We had expanded flat A, B, C, where we got a lower high right here. Still this lower high, it's a double top. So we have to adjust this. And depending on how you, I think you go the initial 1, and then you get the 2 here, right? And then you can, this will be a conservative move here, but you can do this a couple different ways. But this is continuing to push here. And we're at minimum going to see this 234. I think we start to see much bigger extensions to the downside than this. This is super conservative. We're barely getting underneath this move here. But what could happen if this is a 1-2 is we get down to this target and we get a bounce for a lower degree 1-2. And then we start heading. So it just all depends on what's happening at the time. All right, and VIX, we'll get this video out to you intraday. All right, so the VIX, not really doing anything. No fear yet. Has not broken this low. I thought initially we'd break this low. So if we gap up for CPI tomorrow, we could probably see the VIX just gap down. Big move down to the options expected move here, perhaps. So we'll, otherwise we're breaking out of this wedge here, and we just start to we get a higher low. So you have a low here and then a higher low, and you start to move from that point. So obviously at the point we start breaking that trend line, we're really going to start taking off at that point. And also this is a really good support resistance as well. So I'm going to keep that marked up here. And that will be also a buy signal to get above the 23 right there. All right. Thanks for joining us here, you guys. Sorry the video got a little bit long there, but don't forget to like the video, subscribe, and we'll talk to you tomorrow.